All right, welcome everyone. We're diving headfirst into Equitas Small Finance Bank today.
Yeah, always interesting to see what they're up to.
We've got their Q2 FY25 reports, the investor presentation, the whole shebang.
Really gives you a feel for the pulse of their business, what's working, what's not.
Exactly. So first things first, their profit this quarter, it came in at Rs 13 crore.
That's down from the R's. 198 core they reported at the same time last year. Quite a drop.
Yeah, pretty substantial. And they're pointing to that Rs 146 crore provision they set aside for potential losses, mainly in microfinance.
Right, got to factor in those potential bumps in the road. But it's interesting, isn't it?
How so?
Well, it seems like they're being very proactive, recognizing the microfinance sector is going through some stuff.
So kind of like battening down the hatches.
That buffer, which is smart. And don't forget, their overall loan and deposit growth is actually quite strong.
Yeah, 15% jump in advances and a whole 29% increase in deposits. That's year over year, right?
Yep. So they're not just playing defense, they're also making strategic moves for future growth.
Let's dig into this microfinance situation a bit more. Seems like that's the big story here.
Absolutely. The report doesn't shy away from it either. They straight up acknowledge the stress in the sector.
And their collection efficiency for microfinance dipped to 98.1%. So not terrible, but...
But in this environment, even a small dip can raise eyebrows. It makes you wonder what's going on beneath the surface.
Well, they did highlight one specific detail, remember? That segment of borrowers with loans over Rs, 1.5 lakhs, from multiple lenders.
Oh yeah, those folks are feeling the heat.
Yeah.
Makes you think, is it over-leveraging? Are they taking on more debt than they can handle?
Or is there something bigger at play? Maybe economic factors affecting their ability to repay?
Lots of questions to unpack there.
Definitely. But hey, it's not all doom and gloom, right? The report has some bright spots too.
For sure. Their growth in other areas like non-microfinance loans is really promising.
Yeah, 20% growth year over year. That's fueled by housing finance and small business loans, both doing really well.
Seems like they're diversifying their portfolio nicely, spreading the risk a bit.
And what about that MLP category? That saw some crazy growth, didn't it?
Oh yeah, a whopping 156% year-over-year jump in disbursements there.
MLP, for those who need a refresher.
Microloans against property. Basically, small businesses putting up property as collateral.
Ah, so they get access to bigger loans, and Equitas has that safety net.
Exactly. Smart way to manage risk while tapping into a market with huge potential.
They're definitely thinking strategically with their lending, but what about the other side? Deposits.
Yes. Got to have the funds to lend, right? Well, they're doing pretty well on that front, too.
29% year-over-year growth in deposits? That's impressive.
And here's the key. They're focusing on retail deposits, those valuable CASA accounts.
Kisai, Kasa, remind me again why those are so important.
Think of it like this. Those accounts typically have lower interest rates for the customer, meaning Equitas can lend that money out at a higher rate, boosting their profit margin.
So, more retail deposits equal a more stable and cost-effective funding base.
Got it. It's all about building that solid foundation brick by brick. And speaking of building, let's not forget their digital efforts.
Right, their self-loan app disbursed something like Rs 350 crore in loans just this quarter.
They're going all in on digital, and it's paying off.
So tell me, what's the magic behind this self-loan app? What makes it so special?
Well, imagine this. You're sitting at home, need a loan, a few taps on your phone, boom, you've applied.
That's it. Sounds incredibly convenient.
Exactly. And it allows them to reach a wider audience, especially in those areas without easy access to bank branches.
Smart move. It's not just about being trendy. It's about expanding their reach and making financial services accessible.
It's part of a bigger trend we're seeing. Digital banking is exploding in India.
Makes sense. Everyone's got a smartphone these days. It's the future of banking, isn't it?
It really is. And for Equitas, it's a way to streamline operations, reduce costs, even personalize products, using all that data.
It's like stepping into a whole new world of possibilities.
Exactly. And this digital push is happening at a time when the small finance banking sector in India is incredibly dynamic.
So where does Equitas fit in this whole landscape?
They're definitely one of the major players. They've got a strong track record, a wide network, and a good reputation.
But as we've seen, this microfinance situation is throwing a wrench in things.
Yeah, it's impacting the whole industry. Rising delinquencies, increasing credit costs. It's putting pressure on everyone.
So what are other banks doing to cope?
They're adapting, just like Equitas. diversifying portfolios, exploring new segments, shoring up their deposit bases.
It's like they're all navigating the storm together.
Exactly. It's a balancing act. Got to manage risk while still aiming for growth.
It's a fascinating story to follow, especially for those of us who are
Intrigued by the inner workings of the financial world.
guilty as charged. And speaking of fascinating stories, we can't overlook Equitas's beyond banking initiatives. They're doing some amazing things.
Absolutely. It's truly commendable how they're going above and beyond their core banking activities. They're not just about profit.
Yeah, they've helped place over 300,000 people in jobs, they've held over 49,000 health camps, and they're training women in all sorts of skills.
It's like they're weaving social responsibility into the very fabric of their business.
It shows they're not just a bank, they're a part of the community, invested in its well-being.
A bank with a conscience.
So we've covered financials, strategic moves, and even their social impact work. Feels like we've barely scratched the surface.
Oh, there's so much more to explore. This is just the tip of the iceberg.
Get ready for part 2, folks. We'll be diving deeper into Equitas's strategic playbook, especially how they're riding this digital wave. It's going to be a wild ride.
Buckle up. It's amazing to see how Equitas is not just going with the flow, they're actually shaping the financial landscape with their strategies.
Right. You can't just sit back and watch these days. Got to be proactive. And one thing that jumped out at me from these reports, their lending strategy is getting really, really specific.
Oh yeah, they're going granular. It's not just about vehicle loans. They're breaking it down even further.
Exactly. So, like, they're tapping the brakes on growth in new commercial vehicles, but they're pushing hard on used commercial vehicles and used cars.
Makes sense, right? They're seeing more demand, potentially better margins in the used vehicle space. Gotta optimize those returns.
Smart move. And remember that MLP category we were talking about earlier?
The one with the crazy growth. Of course.
Yeah, 156% year-over-year jump in disbursements. Like they hit a gold mine.
They kind of did. It shows they really understand their market.
Remind me again, MLAP stands for?
Micro loan against property. Think small business loans, but they're putting up property as collateral.
So bigger loans for the businesses, lower risk for Equitas. It's a win-win.
Exactly. It's that sweet spot, balancing risk and opportunity. And they're doing a great job of it. But wait, there's more. Their deposit strategy is equally impressive.
Well, they did manage to grow deposits by 29% year-over-year. Can't argue with those numbers.
No kidding. And they're not just taking any deposits that come their way. They're laser focused on retail deposits, especially those KSA accounts.
Right, because those are the ones with the lower interest rates, giving them more flexibility.
It's like building a strong financial base, one deposit at a time. And look at this. Their elite customer base grew by 22% year over year.
Elite customers, who are we talking about here?
Think of them as the high rollers, big balances, using a wider range of banking products. Attracting these guys is a big deal. It shows they can compete for those high-value clients.
So they're playing in the big leagues now, but they're not forgetting about the smaller players either, like the NRI market, for example.
Oh yeah, 39% year-over-year growth in their NRI customer base. Smart move, tapping into that huge Indian diaspora.
And it diversifies their deposit base geographically, which is always a good thing, casting a wider net, bringing in those global funds.
Exactly. It's all about thinking ahead, spotting those trends, and capitalizing on them.
So they're growing loans strategically, attracting deposits like crazy, diversifying their funding. But how is all of this affecting their bottom line?
That's where it gets a bit tricky. Their operating profit, the 4 provisions and contingencies, that grew by a decent 6% year over year.
Not bad.
But their credit costs, those jumped up significantly, mainly because of, you guessed it, the microfinance situation.
Right, that big provision for potential losses, that definitely took a chunk out of their profits.
It did. Their profit after tax, the PAT, that took a 93% hit compared to last year.
Ouch. That's a big drop. But they did say a lot of that was a one-time thing, right? Being proactive, protecting themselves.
Exactly. Better to address it head on than let it fester.
So should investors be worried?
Not necessarily. This is just a snapshot. Microfinance is going through some adjustments, and Equitas is taking the right steps to manage the risk.
They're tightening their belts, preparing for the bumps in the road.
Exactly. But beyond these short-term fluctuations, their core business is strong. They're growing smart, attracting those low-cost deposits, diversifying their revenue.
And their capital adequacy and liquidity ratios, those are looking good, right?
Solid as a rock. They're not just focused on growing, they're growing responsibly.
Which brings us back to those beyond banking initiatives. Even with all this financial juggling, they're not forgetting their social mission.
Absolutely. They placed over 11,000 people in jobs this quarter alone. That's impressive.
It's really inspiring to see them putting their money where their mouth is when it comes to social responsibility.
They're tackling healthcare, education, women's empowerment. It's more than just banking, it's about making a real difference.
It's clear they see themselves as part of the fabric of India, contributing to its progress.
Absolutely. It's a commitment to building a better, more inclusive society. Now, let's switch gears a bit. Let's talk about their digital journey.
Yes, we touched on their self-loan app, but it's clear digital transformation is a big deal for them.
It's not just a buzzword. It's at the core of their strategy. They're riding this digital wave, using it to redefine how they connect with customers.
Remember that figure, Rs 350 crore dispersed through their app this quarter? That's a pretty clear sign they're serious about digital lending.
No doubt. It's all about leveraging technology to make banking easier, faster, more accessible.
Meeting customers where they are, on their phones, making it seamless, intuitive.
Exactly. And it's not just about lending either. They're using digital to offer a whole range of products and services.
So it's like a one-stop shop for all their financial needs, right there in their pocket.
That's the idea. And they're using all that data to personalize offers, create tailored solutions, even offer proactive support.
It's like having your own personal financial advisor 24/7.
Exactly. They're going beyond just transactions. They're building a deeper, more personalized relationship with their customers.
It's about creating a better customer experience, building trust and loyalty.
Which is essential for any business these days, especially in the digital world.
Okay, we've talked about deposits, digital initiative, all sorts of things, but there's one piece we haven't touched on yet: capital adequacy and liquidity.
Ah, yes. The foundation of any strong bank.
Their capital adequacy ratio, the CRAR, that's sitting at a healthy 19.36%.
Well above the regulatory requirement. That's a good sign. It means they've got a nice cushion to absorb potential losses.
It's like a safety net. And their liquidity coverage ratio, the LCR, that's at 158.79%.
Which means they've got plenty of liquid assets to meet their short-term obligations, like having a well-stocked emergency fund.
So they're growing, but they're not taking unnecessary risks. They're building a strong financial base for the future.
Precisely. Managing risk, ensuring they have enough capital, maintaining liquidity, these are all signs of a well-managed, financially sound institution.
And to bolster that capital base even further, they're planning to raise up to Rs 500 crore through non-convertible debentures.
The NCDs. That's right. It's like adding another layer of protection. They're borrowing money from investors who get a fixed return.
So investors get a decent return, and Equitas gets the capital it needs to keep growing.
Exactly. It's a win-win. And it shows they're being proactive about managing their capital structure.
Okay, so we've analyzed their financials, looked at their strategic moves, even touched on their social impact work and their digital transformation journey. It's been quite a deep dive.
It has. We've learned a lot about how Equitas is navigating this ever-changing financial landscape, but there's always more to discover, more to understand. And that brings us to a question for you to think about.
It's interesting, right? They've got this super advanced digital side, but they're still deeply rooted in that traditional microfinance world.
It is. It's like they're juggling two different balls, trying to keep them both in the air.
So the question is, how do they bring those two worlds together? Can they really serve those traditional microfinance customers while also attracting those tech-savvy small businesses who want the latest and greatest?
Ah, that's the million-dollar question, isn't it? It's a real balancing act. They've got this rich history in microfinance, those strong relationships they've built.
Right, those face-to-face interactions, the trust they've earned over the years.
But then there's this huge potential in the digital small business market. It's like they're standing at a fork in the road trying to figure out which path to take.
Maybe they don't have to choose. Maybe they can find a way to merge those paths to create something truly unique.
Now you're talking. Imagine they could develop these specialized digital platforms just for micro-entrepreneurs.
Give them access to microloans, financial tools, maybe even connect them with suppliers and customers online.
It's like building a whole ecosystem where these micro-businesses can not just survive, but thrive.
Level up their game, and they can leverage those existing relationships, bring those microfinance customers into this digital world.
Exactly. It's a natural evolution.
Yeah.
And on the other side, they can use all their digital expertise to offer those tech-savvy businesses something special.
Yeah, things like working capital loans, supply chain financing, even personalized advice.
It's like a customized toolkit for success, helping these businesses reach their full potential.
So it's not one or the other. It's about finding that synergy, that bridge between their past and their future.
And that could be a real game changer for them. It positions them as a leader, a pioneer in serving this incredibly diverse and dynamic small business landscape in India.
It's an exciting time to be following Equitas, wouldn't you say?
Absolutely. It's a story of innovation, of social impact, and a real commitment to making a difference.
And that wraps up our deep dive into the world of Equitas Small Finance Bank. We've covered a lot of ground, explored their financials, their strategy, their social impact, and their digital transformation.
It's been quite a journey.
It has. But remember, folks, the journey of discovery never truly ends. So keep exploring, keep asking questions, and keep learning about the fascinating world of finance.
Stay curious, stay informed, and stay tuned for our next deep dive. We'll be back soon to uncover the stories behind another intriguing company. Until then, happy investing.
And remember, knowledge is power.